Hey everyone, appreciate you tuning in on our day off today. It is Monday, December 26th, 2022, 1 p.m. Eastern. So I'm going to do a little bit of Q&A right now, live streaming on YouTube and doing a Twitter Spaces at the same time. And if you have any questions, feel free to type them in the YouTube chat or feel free to raise your hand on the Twitter Spaces. I already compiled a bunch of questions from people over the last couple of weeks. And so I will be going through those first before I take any current questions. But let's get right into it. And we'll start from the top. So first question is, and by the way, I'm Dan of TheChartGuys. I've been trading full time for 12 years. I'd say taking it really seriously as, going to be my occupation for my life, probably 9 or 10 years at this point, and started TheChartGuys probably about just over 7 years ago at this point. So stacking up the years as we go along, certainly starting to make me feel older. But the first question we've got is, this individual wants to know about the mentors that I have come across when I was a young student of trading. How did I come across them, and what was their approach to trading and teaching technical analysis? And for me, it was mostly Investors Hub. That's a forum that is still around and mostly has to do with, OTC names and penny stocks. Certainly not exclusively, but that seems to be the focus of the majority of the participants there. And so I was just, interacting with the different message boards because that was one of the few places, I was interested in that point in time in cannabis penny stocks. So if I Google, cannabis or marijuana penny stocks, then iHub came up. And so I started, poking around that website and seeing what people were talking about and a lot of observation. And this goes back to a point that I made in a recent video. I did that Atlas trading video talking about that pump and dump scam. But one of the main takeaways of that video was make sure you're observing people. It's observe from a distance. You don't have to full on trust someone right away. You can observe their actions and how they act over a significant period of time. And so I was doing that in the message boards and seeing that a lot of people had no idea what they were talking about. You've got your cheerleaders and this stock's the best because X, Y, and Z. And if it's going down, it's because of market manipulation and short sellers. And so there was a lot of that going on. And just like anything, just like Twitter nowadays, there's a ton of insightful, useful information from experienced traders. And there's a ton of junk noise that is easy to distract and make you feel like there's nothing useful on the platform. And so I was in observation mode and I saw one individual whose name on iHub was Osprey Eye, and he would post charts often. And I could see that he was taking an unbiased approach to things. He did not care if things went up or down, which was a breath of fresh air after watching, all the penny stock pumpers on that website. And I also noticed that he was right more often than everybody else that wasn't using charts. And so I say, okay, I want to explore more about what these charts are showing this individual because they are more right than other people. And so if these charts can make you more right than everybody else, then that's something that I want to explore. And so again, it was just a whole bunch of observing. And at this point in time, this individual had their own message board, so to speak, where we would compile information. And that's really the start of the journey of treating trading as a team game, of sharing information and trying to help each other. And so it was a lot of observing and just noticing, okay, he cares about RSI and he cares about the Bollinger Bands and the middle Bollinger Band and these moving averages to help us identify trends. And from there, it was just asking some questions, and it was not a very in-depth, mentorship back and forth. Definitely answered a lot of questions and was generous with his time, but it was also a message board. So, I ask a question and then hours later I get an answer, and it was more so him directing me down different rabbit holes. Okay, he cares about RSI. I ask a question or two about RSI, and then I dived into Google and research RSI over the next, couple of days. And so it was more like guidance versus a one-on-one kind of mentorship. But that was easily, where I got started with technical analysis. And it was big for me to mimic this individual. I would try and sound like this individual and say, okay, he types like this, he observes these things, this is how he talks. And so I then just would emulate that and do it on my own and say, if Osprey I were analyzing this chart, this is what he would say. And then of course, over the years, as I started to get my own wings, I would, put my own spin on things. I would focus a lot more on price action. I would lose some of the indicators that he was using. And that's really the way it goes. Even the people that I teach, that I've been teaching for 4 or 5 years, we don't trade the same. We don't chart the same. We don't do the same technical analysis. We started from a similar point, but then you drift apart as people find different things that they like and they ditch things that they don't like. And so that really, no two traders are the same. And that comes with personal preference and personal experience. Next question, how would I do in current market conditions, we'll just call it 2022, if I just started trading? Not well. Absolutely not well. And so that's why my main statement for 2022 is if you are in your first couple years of trading, just survive. Your goal is to survive. And if you go break even, that's a big win. You're gaining a lot of experience. You should not be expecting to be profitable in this kind of market environment in your first couple years of trading. And for me personally, I lucked out and stumbled into a bull penny market. And it had a little bit to do with, being right fundamentally, because I was interested in cannabis penny stocks because California was just voting for the first time, first state to ever vote for recreational cannabis, and it failed, but that was enough to give, bull momentum. And so I stumbled into a bull market that allowed for me to get a couple 100% without knowing what I was doing. I made a fundamental decision to grab some positions. It worked out. But, had I jumped into 2022 as my first year of trading, or if I, tried options for the first thing I learned in trading, I could very easily have blown up my account and I could very easily not be a full-time trader right now. So I absolutely am very grateful for the very safe market environment that I lucked out to enter in, which gave me cushion to work with, a profit cushion. And then when I started to take my bumps and started to learn my lessons, I had that profit cushion to work with to ensure that I didn't go bust. Because if I went bust, I was going to get a 9-to-5 out of college. That was a clear cut for me. All right, here's $3,000, give it a go. If you lose this, that's it. You get the 9-to-5. And so my back was against the wall at the start. And again, I definitely lucked out. So if you're in your first couple years of trading, and that's the thing, it's so hard for people to put in time and effort and not see instant results, but you're putting in the time and the effort to see results years from now. And so in your first couple of years, if you're going break even, to me, that's definitely a win because you're preserving capital and you're learning lessons that you will then apply to the future, which you can then grow your capital with once you have that experience. So I would not be doing well if this was my first year of trading in 2022. How to build back confidence after a bad streak. So I made a tweet about this recently. If I'm having a bad streak, you got to get your head out of the game because otherwise you can end up in a downward spiral and it's a psychological loop that has you second guessing yourself, and then you take a loss and then you feel bad about it, and then your next trade you don't have any confidence, and it just can really spiral out of control, just like in poker when you are going on tilt and you just lose yourself, you lose control, and you then get a whole lot of negative impact over a prolonged period of time. I just realized that I did not have my Twitter Spaces audio on, but we're on now. So appreciate your patience there. I'm going through a list of questions that I've already compiled, and I will ask any questions on Twitter Spaces once I go through some of this. Thanks for tuning in, and thanks Dinsey for the heads up. So how do you build back confidence after a bad streak? Get off the computer, get off of social media, get off of the charts, close your account, and go into nature. This is the aspect of trading that is very difficult, the psychological aspect. We have to be able to separate ourselves from the digital world. And for me, the number one thing is reminding myself there are so many more important things in this world than the numbers that are in my account. And that helps me get over it. That helps me realize, okay, it's not a huge deal that I took a big loss. I can recover from this. I have health. I can look on the positive side, because it's very easy for us to get in that negative downward spiral and to be really down on ourselves and to look at the negative side of everything. We have the choice when anything happens to us in our lives. We have the choice where we can view it negatively or positively. We can look for the positive in any situation, and we have to do that to prevent from that negative downward spiral. So, I take a big red loss and I say, okay, well, I'm never going to make that mistake again. And maybe it's going to hurt my account now, but in the future, my account is going to avoid this kind of mistake, and that will benefit me in the long term. This trading thing is a game. It's a game that has significant implications in my financial life, but it's a game, and there's so much more that is important. And so I really suggest getting out into nature by yourself. And whether you're journaling out there or whether you're just, sitting quietly and meditating, the number one thing you're doing is reflecting on the mistakes you made and then trying to ensure that you do not repeat them. So okay, these are the mistakes I made. I've identified them. Now, how can I move forward in my trading to ensure that I stop repeating these mistakes so I can move towards improvement? And I have vivid memories. In my memory, I can take myself right back to when I was sitting on a beach. At this point, it's probably 8 years ago, after a solid loss, and doing the exact same thing. At first, reminding myself how insignificant it is and how vast the universe and the ocean is and all those things. And then, all right, I made this mistake. I'm not going to swing these penny stocks overnight anymore because the risk of being delisted, I did not know that was a risk, and now I know. So get outside and get your mind in a better place. And again, if you're stuck on social media, it's way too easy to stay in that negative loop. This individual has been wondering about account management and strategies to begin diversifying some money away from a core trading account. So this is someone who's a little bit more advanced in the trading game, a few years in, and wanting to know how to allocate the capital that they have towards a day trading account or a swing trade account or a long-term hold, and how to set aside money for taxes. It's a long question here. So as my account grew, how did I decide what my core trading account would be and where the additional funds would go and when? So, all right, there's a lot to break in there. As far as taxes, understanding what your tax rate is a way to just blanket statement know what you're going to be paying in taxes. If you've got a 20% rate, just assume that every dollar that you make, 20% of that is going to be owed in taxes. And so you can set that aside and move it out of your account, or maybe you're paying, I know for me personally, I pay quarterly estimated tax. So every quarter I've got to do that. I've got to pull my money out and pay those taxes. So just put it aside, take it out of your trading account if you want to be extra safe about it. If you've got enough that no matter what, you're going to be covered, then you can keep trading with that capital. But obviously, people get in a lot of trouble when they lose the money that they owed on taxes from prior year's gains. So definitely, and that happened a lot in 2022 because we ended 2021 so strong. Everybody has a lot of gains. Maybe you lock in a bunch of those gains, and then you take a fat loss in 2022. That fat loss does not offset any of the gains in 2021. You still owe those 2021 taxes, but you've lost a lot of that capital in 2022. So definitely set things aside if you are prone to big swings in your account. As far as where to allocate things, it depends on the individual. How confident are you as a day trader? If you're extremely confident, you're going to have 80% of your funds in your day trading account. If you're not much of a day trader or you're distracted with a job and things like that, then you're going to have maybe 10 or 20% in that account. If you are, planning your retirement, you've got a lot more in your IRA than you have. I personally use my IRA often as my swing trading account, but it really does depend on the individual and the confidence of the individual as to where you're going to be putting capital. I know once I hit a certain point, I said, all right, I'm not going to be sizing up my trading position sizes anymore from here. So then I started to diversify outside of my account, my trading account. And I got a little bit of real estate and a little bit of metals and things like that. So that's when you reach a point where you say, I'm not going to size up anymore from here. And again, that level is going to be very different for many other individuals. I've been watching one trader on social media who's been trading with the same position sizes for the last 7 or 8 years. And during that period in time, my position sizes started at, a third of their position sizes and are now multiple times more than their position sizes. And so the biggest difference is this individual has a ton of children and I have 0 children. So that's a major decision. That's a major factor in determining how aggressive one wants to be versus how conservative. So someone may reach the point where they're not going to size up a lot sooner if they have a lot more, outside obligations versus someone who maybe is younger, has less debt, has less responsibility, and so they're going to try and size up a bit more aggressively. I always talk about day makers, half day makers, and things like that. What can I elaborate on what % gain is a day maker for me? So I say day maker and day loser just because for every individual it's different, and it's changed so much for me over the years. So the clearest example I can give is back in, let's just say 2016, my day maker was X dollars, and today my day maker is 10 times that. But back then in 2016, the percentage of my day trading account that was a day maker was maybe 0.5% of my account. And now my day maker is 0.1%. So it's 10 times the monetary size, but it's a less significant percentage size. And again, this is up to the individual as to what they want their day maker to be. In the Chart Guys community, we have a bunch of people that, one individual will have their day maker as what they're making in a day in their full-time job. Another individual, for me personally, it's if I make this amount of money each day for the year, and of course I allocate that I'm going to have some red days in there, but if I make this each day, then I'm hitting every goal that I could have, and I've got everything that I need in terms of financial freedom. So that's the outlying level for me as far as what is my day maker. And it's important to have, what's more important to have is the day loser level. Because when I hit the day loser, I'm done. And again, that's my automatic timeout to prevent from going on tilt and blowing up, giving back a month of profit in one day. And an example is I know a trader that this year, what day was it? I guess it was the day when Powell first pivoted to saying, hey, we might scale back the rate hikes. Maybe we'll go 50 basis points. Whatever day that was, the market ran up really hard. And this individual that's been trading for 4 to 5 years, one day blew up their account. And so obviously there are ways to ensure that doesn't happen by not using leverage, not trading futures, not trading options. But it just goes to show you that it literally, if you are trading those high risk instruments, it takes one day of lapse in judgment to destroy 4 to 5 years of work. And so we have to prevent that from happening. And we have to have the discipline that says, if I hit this level, I am done for the day because clearly I don't have it today. And the analogy that I give is, if you're a coach in a basketball game and the other team goes on a 10-0 run, just scoring possessions and stealing the ball, and they've just got momentum, you call a timeout. You call a timeout to break their momentum and ensure that they just don't keep running with it because they're in flow state and you're in the opposite of flow state. And you got to call the timeout to change that. And so that's what a day loser is for me. If I lose this amount of dollars, I am done for the day and I'll see you tomorrow. I know the market will be here tomorrow. And again, we have to have that kind of discipline to ensure we protect our capital. Over everything else, rule number 1 is protect your capital. From there, we try and make gains, but we've got to protect our capital because we have zero chance of making any gains if we lose our capital. So that is criteria number 1. Next question. In those moments in life when multiple dots connect and you say, aha, so aha moments. This individual would like to know what those were for me in terms of trading. Some of the examples, in 2022, I've talked about how watching lead bulls change into laggard bears in a bear market has been a bit of an eye-opener for me. Okay, this is my first bear market, and I'm observing the shift in correlation of relative strength into relative weakness. And we've seen that a couple of times. Tesla did it earlier in the year. We've seen, times when the solar sector would do it and when the energy sector did it most recently. So that's been an eye-opener for me. Another example was realizing the relationship of timeframes with each other. How the 5-minute time frame gives us details about the hourly trend, and how the hourly trend gives us details about the daily trend. That was definitely another aha moment. Those are some of the main ones. Again, right on cue, back to stop losses. Of course, using a stop loss was an aha moment for me. Oh, I can limit my losses, and I can be in control and know exactly what the worst case scenario will be for a trade before it happens. That was definitely an aha moment for me. Just using price action in 2017 crypto, I ditched a lot of moving averages and Bollinger Bands and things like that and went to a more pure price action and trend style of trading and analysis. That was a big eye-opener for me and a big benefit. And probably one of the more significant ones was when I started teaching people, which started at this point, 8 or 9 years ago. But when I started teaching people, it was a big aha moment for me in terms of this is going to make you so much better yourself. You are going to help other people get better, but you are going to benefit as well. It's a very mutually beneficial relationship, because if I'm going to explain something, I obviously have to be able to understand it completely. I have to have experience in it. And so I would have to ask myself internally a lot more in-depth questions than I ever would have reflected upon if I were just by myself. So, someone asks me to explain a concept. Okay, I now have to dig back in my brain and formulate the answer through my experiences. And doing that was a huge level up for me in terms of understanding technical analysis, understanding my own trading, and then, putting those pieces of the puzzle together to have a more complete picture of trading as a whole. And that's why I suggest to everybody, even if you're in your first year or two, if you can find a friend or somebody online or something that's completely new and you can explain the very basics to and start to establish that relationship, it is very mutually beneficial. You will benefit just as much as the other person that you are sharing your time with. So I really suggest that for newer traders. Explain things to other, even newer people. Got a question here on Twitter Spaces. You are live. Satoshi, how you doing?
Hey, what's up, Dan? Big fan. Always interested in hearing your trading opinions and strategies. Also on the lifestyle side, I know you're into farming and all that. So in terms of staying fresh, mental health, diet, all that kind of stuff, any secret tips and tricks just on that level?
Sure. Thanks for asking. So I would say that on the health aspect of things, and again, it's very important. You don't at the surface think, I want to be a good trader. I need to watch what I eat and exercise. But again, it's such a lifestyle to be a trader, and health is hand in hand with everything. For me personally, everything changed about my diet. Back in college, and in college is when I started trading. I was drinking crap beer and I was eating crap food, and so my diet changed after I started getting into markets. But it was really the pivot for me was growing my own food. And once I started growing some food and I established a connection between the seed and the seedling and the plant, and then harvesting the plant and then cooking that kale up and then eating it, it was just, whoa, this is way different than anything I've ever experienced with food. Like, I have a relationship with my food. I've been tending this thing for months. I've been watching it grow, and now it's nourishing my body. And that was a huge connector for me of realizing this is the way that it should be. And from that point forward, it was just really focusing on ingredients. I want to know what the ingredients are. Before, I didn't care what a label said, but if I can look at a label and pick out 6 things that I have no idea what that is, I don't want to put that in my body. I want the simple, basic, clean, healthy things that are easy to identify, the real ingredients to things. And then if you really want to deep dive, you go back and you look at, how the last 50 plus years of, just go back look at the history of the food pyramid and what they taught us in school and the funding behind it, the dairy industry and how they started the campaign of a glass of milk a day, and just how it was so infiltrated by large corporations to sell us junk. The large corporations have no interest in our health whatsoever. You can go as deep down the rabbit hole as you want, but the bottom line is the most pure and basic foods that you can put in your body that you can identify are going to be the healthiest for you. And again, if I can't be on my A game in terms of a healthy routine, then I'm not going to be on my A game in a healthy trading routine. And one of the questions that I always get is, how can I be more disciplined? And the answer is practice discipline in every aspect of your life. Because if you do that, it will bleed over into trading. And so choosing what you eat on a daily basis. I want to eat Taco Bell. I enjoy the taste of Taco Bell. I would eat it often if I knew it wasn't junk. But I knowingly choose not to do that. I love the taste of beer. I want a beer every single day. If beer was good for you, I would have a beer at the close of every day of the market. But I know that it would not be good for me, and I know that it would weigh on my body, and so I don't do it. I actively make a choice on a daily basis not to do things that would give me temporary satisfaction to ensure the longevity of my health. It's essentially foregoing short-term gains to have long-term gains. And again, I just can't stress enough, sleep cycle, exercising, and your food in terms of a way to have a healthy lifestyle that then bleeds over into trading. So discipline at its core, do those push-ups, go to the gym. There are plenty of times I don't want to go to the gym, but I go. I force myself to do it because I know it'll be better for me in the long run. So good question, appreciate that. Going back, and again, feel free, anybody else, if you've got questions, raise your hand. Let's answer a YouTube question now. So if I had to start all over again, what are some things that I would do and would not do versus the last time around? So let's see, I would say I spent a little too long in the penny stock world, but it gave great opportunities. There were penny stock booms from 2010 to 2013 that gave me a stack that I could then take into real stocks. But I stayed around a little too long. I learned plenty of great lessons there that helped me keep my gains in crypto booms and things like that. So it's hard to look back and say, I would change anything because the way that it worked out was really well. I would say using stop losses sooner, that would have been one that I would have implemented faster. Other than that, honestly, I've been extremely lucky extremely lucky, but obviously I put in a ton of time and a ton of work and effort. And I don't doubt that they go hand in hand. I don't doubt that I get lucky because I put in so much time and effort. So there's not much that I would change because every big mistake that I made benefited me in the future. Every single one. Let that sink in for a moment. Every single mistake that I've ever made as a trader, if I were to erase it, I would just make it later in my trading career. So I have to make those mistakes because I don't ever make them again if they're big enough. And like this year, just an example. So in prior years, I lost when gambling on earnings. And so then I make a rule. I will not play any stock earnings. And so this year, I had a scenario, and I'm going to talk about this. I'll do a video about a New Year's resolution for 2023, and I'll make that next week. But my biggest loss of this past year, 2022, was trading after the earnings reaction on Netflix, but there was so much volume and activity going on that reaction. It was the day that we dumped. I think we went down 20% by the next day. I forget how big it was, but I was just playing a little scalp bounce, and I made my entry, and it went really well, and I would have exited, a few minutes later, but Fidelity stopped processing my orders, and so I literally couldn't sell. And so I had to watch the price drop knowing I'm holding these shares and I literally could not sell. And I had nothing to do with it. It was my broker not putting through orders. And so that was a big lesson to me. Oh yeah, that can happen. That is one of the very low probability risks that can be very real. And so I have a new rule now. I'm not trading earnings reactions after hours on any stock ever again, because that was my biggest loss of this year, and I will not ever repeat that mistake. And so, if it's very important to have these mistakes along the way so that we are able to learn from them. Cube Scalps on Twitter, you are live. What's up? You there, Cube?
Oh, hi, I'm here. I'm listening. Sorry, I think it was delayed, so I was still listening to the election that you were giving. And all right. I just want to give thanks to I follow some of your content, and I remember one thing that hooked me was you calling near the top of Bitcoin, and I was one of those guys, believers, I guess that don't look at really technicals, and was full of hoping. So I think it was an eye-opener to see you basically, get rid of the position, it was going to make a lower high. So let's move on to something else. And I was still hooked into it, right? So I still get out with gains, but it was less than I would have hoped. So, but it was an eye-opener, definitely. So my question here is that, I have a couple of questions, right? So we are consumers of content of trading, right? And you're one of the persons that I watch on YouTube, but I also watch some other people, right? So I think some people will make some bad call-outs from time to time, but I do have to weed out sometimes who really doesn't really provide good info besides the psychology thing, like some good TA, some good analysis. And I don't know what's your criteria, do you still consume content now that you're a content creator, or what do you go from there? And I don't know if you have me asking the other questions already, or just wait for you to answer that.
Sure. So unfortunately, I don't have time to consume much content besides, trading, and then the content that I put out from that point in the day, I want nothing to do with technology. I am aware of people. I'll listen to little snippets here and there. And there are, you get a feel for the people that are, who know what they're talking about versus that don't. And again, it takes time. You got to observe. It's not just one video. You got to observe people over a long period of time. And longevity, again, this goes back to the Atlas trading video that I did, but people that have longevity, that have been here for 5+ years and have been putting content out for 5+ years, they generally, not always, but generally, have a little bit higher level of trust. And so what I need to see in content for me is honesty. I need to see people that are talking about their losses just as much as their wins, because we know that they're taking losses if they are actually trading. And so if they're just, skimming over those and not talking about them, then there's a level of dishonesty there. So they've got to be talking about losses. They've got to have a lack of ego in the sense that they are able to admit mistakes, which goes hands in hand with talking about those losses. So I need to see someone say, I don't know. Because if there's someone who puts out content and is constantly saying, I'm confident that this is going to happen, that's not realistic. There are plenty of setups out there where we can say, I don't know what the most likely scenario here is, and that's perfectly fine. And I just wait. That just means I don't trade the setup until I do get the confidence and the clarity. So I need empathy as well. And that's a more tricky one to be able to observe. And again, it comes over a long period of time. But those are all things that I personally need to be able to trust someone in the content that they put out.
And how will you suggest for medium level or even new level trader, about how do you balance out consuming content or versus doing your own research analysis, so like how you spend that time how do you do it? Did you do it before being a content creator that now doesn't have the time to look at other people's stuff, right?
Yep. Thanks for the question. So I would say that, let's see. In your first year, you're consuming way more content than you are trading because you are acting like a sponge trying to get as much information and knowledge as you can. And again, if you want to be trading, you want to be putting in those reps. You know, I want to practice executing orders. I want to practice placing a stop loss. I want to take some losses and have some wins and see how my emotions are reacting to those things. But again, everybody in year one should just plan for red and anticipate red. And if you start from day one anticipating that you're going to be red in your first year, then you're going to be automatically pumping the brakes and starting slow. If there's people that go into a year one and I want to get 50% on my first year and hit this goal because I saw somebody else on social media doing it, then they're going to be over trading and likely going to lose. So you want to start real slow with your own trading. You want to start, it's honestly, the graph would look like just an inversion of itself where you're consuming a ton of content and trading a little bit. And then as time goes on, you're consuming less content and you're trading more. But I would say time of the day obviously has a ton to do with it as well. If you are able to, focus on trading during the trading day, and maybe you're in a position and waiting for it to play out, you can consume a little bit of content in the meantime. But for me, it was when I really put in, there's a 4-month window where I said, I'm treating learning technical analysis for the next few months as my full-time job. And so I would focus on the trading aspect of things and observing trading. Even if I wasn't trading, I was observing price action during the trading day. And then after the market closed is when I would dive into Google and YouTube and things like that in terms of consuming content. Because obviously if the market's closed, then you can't be trading at that point in time. And so that's the ideal time to be consuming content. So I would say that consuming content at the start of your trading journey should be way more significant time input than actually trading. That was a good question. All right, back to my compiled questions. Let's see. So here's a good one. This one relates to starting the chart guys. So you put in a ton of work into the chart guys, and I'm curious about what you've had to miss out on or sacrifice to achieve the level of success with the chart guys, and whether I have any thoughts to share on that topic. So I would say the biggest thing, let's see. Again, it's another one that goes hand in hand because I am such a better trader because of the chart guys than I would be otherwise. And it's because of accountability. If I'm only accountable to myself, then it's so much easier to skip the day going to the gym or to eat the crap food or to make the trading mistake and not, really learn the lesson that goes along with it. Whereas if I am on a pedestal in front of people, then I have to be on my absolute A game 100% of the time. And there is no lapse in that discipline. And so having that has made me a way better trader. I would force trades more if I wasn't talking about them as they're playing out. I would take less beneficial setups, less higher probability setups than I would if other people weren't, watching, or if I wasn't trying to be a good role model. So again, this is not saying everybody should start a company, but this is saying that everybody should have somebody that they are accountable to. And that's why people have gym buddies and things like that. So you have someone that you're accountable to, and you're like, all right, let's do it together. Let's go to the gym. We don't want to, it's cold out, but we're both going to do it. And so if you have someone that you can establish that relationship with, whether it's a community, whether it's a small group that you can talk about trading with and you can hold accountable, that will improve your trading without a doubt. So for me, starting the chart guys has had immense benefits on my own trading. In terms of life things that I've missed out on, I would say, I would like to travel internationally more, but it's very easy for me to travel somewhere for 3 or 4 nights. But, if I want to fly to Europe, I want to go for weeks. And those are things that I've had to forego because obviously I got a level of responsibility and, I don't just want to ditch the community for a significant period of time. So that's really it. But honestly, it's the same as having a dog. Once I got a dog, I can still have someone come house sit and take care of the dog for 3 or 4 nights. But if I'm talking, 3 or 4 weeks, it's pushing it a little bit. So I would say nothing. I haven't, foregone anything in life more than having the responsibility of an animal would have. But again, I love it. I've been able to enjoy my work for so long. Again, if you told me 7 years ago that, hey, in 7 years from now, you're going to be waking up before the sun every morning and still loving it, I would say no way. But extremely grateful for the opportunity because, again, it's mutually beneficial. I have benefited just as much running the Chart Guys as anybody has benefited from the information that I have provided. Also, since I'm my own boss, is there a time or money goal that I need to hit before I consider retiring altogether? This one is more relevant a lot recently than obviously in earlier years. And I'm going to talk about this in depth. So this year, 2022, was a lot of different psychological things happened to me that have not happened before in my trading career. And a lot of it's not relatable to most of you that consume this content because it's, coming a decade into the journey. But I will share this in depth in my New Year's wrap-up video that I'm going to do in a week or so. But it's definitely something that I am constantly thinking about. What is the goal here? Am I just going to keep doing this forever? Am I going to sit in front of this screen forever? When is enough enough? Things like that. So I'll go more in depth to that in the New Year's video. How do I deal with second guessing myself? So there are two kinds of second guessing yourself. You can second guess yourself in individual trades, and you can second guess yourself as a trader. What am I doing? Is this going to work out? Am I wasting my time? And the second one is really hard because second guessing yourself as a trader, if you're really going to give trading, it doesn't have to be a full, you're trying to be full time. Even if you're trying just to be active, more active and work around, another job or whatever, you've got to give it years before you have that answer. You can't, in the first year or two, you can't say, the only way that you can say this is not for me in the first year or two is if you have an addictive personality and you blow up accounts and have zero discipline. There are people that have that personality type. I have friends that have that personality type. They're good people, but I would never suggest that they become traders. So that's the only kind of person that is going to know in the first year or two that trading is not for them is the people with addictive personalities. Everybody else, you can't even get a start of being able to determine whether or not that's a yes or no answer until 2 years in. After 2 years, you can reflect on everything. Is the time that I put in worth it? Do I enjoy this? Do I want to keep doing it? That's when, you can come to that life crossroads. But if you're coming to those crossroads in the first 6 months, that's not nearly enough time because, again, you shouldn't be expecting to be having success in that short window of time. If you are, it's great, and you've got a great start. But again, it's not the expectation. So that's the trickier one, how to deal with second guessing yourself. Just try and put it off in the first year or two because, again, it's useless. If I'm going to college and I'm in my first semester of a 4-year program, I'm not going to be able to have an adequate understanding of where I'm going to be after I get my degree. Is this degree going to be worth it in the job market? Things like that. Like, you have hardly even started. You've got to give it time before you start second guessing that kind of major decision. As far as individual trades, second guessing them, stop losses. So obviously the more experience that you have and the more success that you have, the less second guessing is going to be a part of your thought process because you have that confidence. I've done this trade a bunch of times. It's worked well. I know it's a good risk reward setup and I'm in. And so stop losses have a major factor with that because if I'm in a trade and I set a stop loss, there's literally zero second guessing because I'm either going to hit my target or I'm going to hit my stop loss. I know the worst case scenario and I know the best case scenario for this trade, and then I just let it play out. So there's no decision making to be had after I buy because as soon as I buy a position, I know where my stop is, I know where my target is, and you just let it play out. So the only second guessing that should take place for individual trades is before you make the entry. is this a good entry? Is it not a good entry? And again, that has to come with experience. So you're going to have to use small amounts of capital, use really small amounts of capital and try certain trading styles. I love playing oversold bounces. There's people that I've taught trading to that love trading oversold bounces, and it has been their edge as a trader. I've taught the same thing to a different individual, and they have determined through their results or through their psychology, feedback, whatever it is, I don't like playing oversold bounces. This is not the trading style for me. And that's perfectly fine. So they then find the trading style that is for them, whether it's trading in equilibrium or shorting. You know, maybe going bearish is more favorable. Lost internet. Might have just lost internet there for a bit. I think we're back. Northern Joints, what you got? You got the mic, Northern Joints, on Twitter Spaces. Maybe not. Moving on. All right. Do I know my personality type? I did at one point. I forget it at this point. I've done the Myers-Briggs. And I most recently did, I forget what other kind of personality test. But I forget off the top of my head. Definitely observant. Whatever one that I recently did, observant was one of the major takeaways, which is true in nature for me. I love observing nature. I love observing price action. So that definitely made sense to me. Definitely more of an introvert. And you wouldn't know it. I mean, it's so interesting that so many of you know me through creating content from, you know, the person behind the counter when I was preteen. And so for me to be, I mean, the analogy that I've given is in the last 7 years, I've said more words. I've probably said 300% more words. I'm obviously just making up numbers, but probably said 300% more words in the last 7 years than I said in the prior 27 years of. And it's just because this personality that you see in front of this camera is so different than who I am otherwise. And so it's honestly, it's just because it's a passion of mine and because I have confidence in it that I've ended here. I gotta fix my internet. I don't know what's going on with it, but it's telling me that it's having some issues. So I appreciate you all tuning in. Just so you know, there are 3 others Q&As that I've done just like this over the years. And so you can go back and watch those. I'm sure the answers have changed over the years, but I've got one from 2019, 2020, 2021, and now this one. So I will link those in the comments of this video and on Twitter as well, so you can see how things have changed over the years. But I appreciate you spending your holiday Monday with me, and I look forward to seeing you all tomorrow when we're ready to close out the year. 4 trading days left to go. Appreciate you tuning in and the questions and all that and the likes and the shares and the support along the way. And we will see you soon.